Hello, Face. Hi, investing.com. Everyone, how's everyone doing this morning? Hello, Ziggy. Everyone doing okay? All right, so I want to start off with the dollar. So yesterday, before the ECB, I said I would fade dollar strength up towards 97.20. Not bad, but you know, you're always reassessing. So that was a decent scalp. And when I was calling for a dollar correction and keyword correction, talking about the potential for a move to 96, when you're labeling something a correction, you always have to keep in mind what is a major trend. Okay, so this is still a bull market in the dollar, so it's a counter trend trade. And sometimes for me, my expectations for corrections are a little bit excessive. So I keep in mind that, you know, during a correction, I have to be flexible about my analysis and always continue to reassess what's happening in the market. And I was looking for a move towards 96, and I'm not saying it can't happen anymore, but here's the picture now. Okay, for that to continue, we need to start closing under this descending triangle line. It's about 96.80, 96.70, and that could take us down here. But, you know, we have just moved around here in a corrective fashion, and it, you know, you could call it a flag, closes back over 97.40, is going to target 99.20, which is a number a lot of people have come up with. In fact, Peter Goodburn's going to be with us at the top of the hour, and that's one of his targets. So it'll be great to talk to Peter and see, you know, if the picture is changing. So looking at the dollar, it's very possible that this is just a little correction and we're going to break out to the upside. So I think you could key off the euro, since the major part of the Dixie is the euro. And yesterday, this candle is very important for two reasons. It failed up near resistance and it held its support. So yesterday's range, to me, on a closing basis, is going to give us the next direction. You know, back over here, you know, 1290, 1300, then you have to be open for a move all the way for a retest here. And then under yesterday's lows, which we came off with, that's how you got the pullback in the dollar from 97.20. Euro came back, even though the pound was leading, which to me is not as bullish. I like to see euro outperforming the pound when I'm bearish a dollar. Anyway, so you have a very important range here, and we take out this 1230 level with the closing candle. Goodbye, bulls. Here's where the stops are, and I don't think it's going to stop there. So you have a very important and kind of a great tool for euro direction. So, you know, do I have a bias? I did, now I don't, and now I'll wait. So as, you know, back here, when I liked the euro, the DSI was 16. All right, I mean, that's a pretty low reading. But, you know, it's still pretty negative. I think I saw it around 28 or so. So this rally here has taken some of the bearishness out of it. And DSIs are not signals. They're just an understanding of when you have extreme sentiment either way. So everyone with me? Hello, Russell. Any questions on that analysis on currency? Okay, cool. Also, I want to talk about the yen just briefly. So, you know, we talked about it, Steve. We were talking about what a weak response this was in the yen yesterday when the dollar popped. And I know Amanda had people short yen. We were talking about a 3 drive to a top area. It extended a bit, but never took out the 1220 low. I actually got out around 1120. But what I'm starting to see develop here, and, you know, I have to consider this too, the major trend in my view is pretty bullish in the yen, and all we need is maybe the bonds to put in their final high, but this could be carving out some type of right shoulder here. Was this enough right here and we're going to go? Well, we'll see, just like the dollar. But you can visualize this being a left shoulder, this being a head, and this being a right shoulder. Could we, break one more time for a 3? Yeah, but now my bias, and I think it's going to be interesting because there will be a correction in equities one day. And in fact, you are getting some divergences in the S&Ps here. And I was just waiting for one more key, and I'm going to time buying VIX and volatility off of IWM. So IWM, every average of the majors has taken out its Feb high. Okay, all of them. So the Russell is the last to achieve it, should it achieve it. And I'm thinking up here, which is, all we need is another day like we had here. Russell was up over 1% yesterday, 1.3, to just take out the highs here, because this was like ABC. And I'm going to use this once we take out the highs, wherever the VIX is at. Sometimes you could use a market to time an entry on another market, and this is a narrative I'm going with. Russell takes out the Feb high, looking to buy volatility and short indices at that time. And really the weakness in the indices, and mainly because of Boeing, has been the Dow. It almost looks like a different animal compared to NASDAQ, right? So here's the Dow. When you look at it on a 4-hour, look how far off the highs it is. What bothers me is this confirmed high on the 4. But compare that to NASDAQ, which has really been the comet leading the charge. And what's interesting about NASDAQ here is we are diverging up here. All right, and the S&Ps are struggling to make a new high up here, and the divergence is even more glaring. And I think part of the equation is stock indexes Siamese twin. And here's the crude, and so far it's showing a little double top at 64.5. In fact, do you guys ever feel like this? It's so close, I could taste it. But I'm going to be patient and wait for one more high. The 4-hour will not confirm for the first time. That's too much mo. We were talking about that with Steve, but this little sideways action has worked it off. I don't believe it's going to take out the high if it happens. But if it happens up towards the 65 level, looking to short it. Here's the 1 hour. This was the first divergence we had in a while. Look how low it is, and all we've done is, it's relieved its overbought conditions here by just moving sideways. So I'd like to see one more spike. Maybe that happens with the Russell, and I think there could be something, at least some type of correction back to 61. And what's going to seal the deal for a longer term correction in crude is going to be closing back underneath the wedge line on this throw over, and that's about $62. Everyone with me? That's my market coverage. Your homework assignment is to subscribe to ForexAnalytix so that you have all weekend to immerse yourself in the team and our work. So FACE has been here for a couple of years, and I know we've helped a lot of people. And if you appreciate that help, help yourself and join our trading community that goes on all through the market day in Europe and the US, and there's even some Asian participation in our members chat, and that's where you could talk to the team, Blake's there all the time. He's been doing this with a lot of the same people, exchanging ideas for well over a decade. And as I've said before, I've talked to a few people, and more than that over the years, that said that getting to know Blake was a game changer. So if you need a change of your game and you have a war face, I invite you to join us. And I invite you to not give away all your commission dollars to your broker. They probably won't like it, but you should be getting a rebate. You could use it to pay for your subscription if you're not in the U.S. You know, in the U.S., we just don't get to do as many things as we used to since the Patriot Act went into, and then, you know, whatever that law was that made every FX firm leave the country because they didn't want to deal with compliance. Anyway, Jason and Trent are a broker of brokers, and there's also no law against having more than one account. In fact, you know, I know people that have an account for scalping, an account for swing trading, and an account for position trading. So these guys have a great selection for you, and you'll get a rebate. So Blake, yesterday you were praying for volatility, and all we did was get stuck in a major range. And to me, it looks like whichever way we come out of yesterday's range in Euro, maybe then vol kicks in for 5 minutes.
Yeah, you know, hey, good morning.
Good morning, bro.
Hey, good morning. So well, there's a couple things I'm doing this morning. The Euro yesterday, I picked up the Euro on a dip. Oh, here, let me show you what.
Okay.
Let me get over there. So when the Euro dipped down to this this lower trend line here, I picked up the Euro at like, I don't know, like 112.50 something, right, like 51, and you know, and it played up to resistance here to the 80s, and which, by the way, above 111.85 is a big deal to me if we get up there. But and then as it dipped this morning, I still had the position as it dipped this morning to 66. I took it off because the ECB had some comments about the Deutsche Bank merger, and I'm like, yeah,
I have a comment, Blake. You know what? Most people would say, oh, they got out at the top. You know, that's what I love about your analysis. It's complete transparency, even if it's, a review of a past trade. You never claim perfection.
Oh, no, I mean, I was in the chat room and I got out this morning, it just didn't follow through. But I do know this for a fact: if we get above this 38% retracement, it's bullish. But yeah, it's going to be fairly difficult to do, in my opinion. It's struggling here, and so I'm not getting bullish until it's above this 32. I also picked up some Aussie yesterday on this rally as well, and I just got out of it for a flat. I got out of it. I think I actually took like a 2-pip loss or something like that. And on my average, I was like, the Aussie dollar is struggling at its triangle resistance, and I'm just not getting long until we break above this. Now, that doesn't mean that we can't break above it. I think that if obviously if there's some sort of China deal resolution, that's going to be the catalyst that drives us above that resistance. And then I'm long then. I'm definitely getting long at that point in time. The cable, I thought it was going to actually move above this resistance and start squeezing yesterday. We pushed right up against this once again 31.20, and then when we stalled, I had my finger on the buy button. I was really ready for this move. I was hoping the Euro would break above that resistance at 112.85, and I thought the cable might start squeezing, and I thought it was going to be like just a 1, 2, 3 catalyst. Euro breaks higher, pound breaks higher, Aussie breaks higher. I'm buying everything. I'm going to sell dollars across the board. That's what I was hoping was going to happen. It did, unfortunately. After sitting here just waiting for volatility to just to come, it just hasn't come, and I was just hoping yesterday was going to be the day that it would come. It just didn't happen, unfortunately. So, again, here we are, just kind of stuck in the ranges, just waiting for something to develop. Hopefully something's going to happen here, and hoping we're going to get a little bit of volatility. One thing that I do want to point out this morning is the dollar Canadian's very well bid, and you can see that probably has a lot to do with weaker crude. A little bit of selling of the equity markets coming in. It's giving the dollar Canadian a bit of a bid right now. So watch this dollar Canadian. We've been very range bound, but we're let me see if I can pull up this, or if I can get rid of this black line, because it just doesn't need to be there. That's not what I wanted to get rid of. That's what I wanted to get rid of. Okay, so the dollar Canadian's fairly well bid at this point. Something we should just pay a little bit of attention to. I'm trying to put this fib up here. Hold on. There we go. Okay, so we've got a little bit above this trend line. So just pay attention to the dollar Canadian. The dollar Canadian may make its way. And actually, you know what? I should probably do this. Dollar Canadian may make its way up to here, which is going to be pretty key resistance around 134.30. If we can do it.
It's been acting great, Blake, don't you think, compared with the strength of crude? I mean, crude's only half a buck off its highs.
Yeah, I mean, crude's coming down, and that's obviously given a little bit of a lift to the dollar Canadian. I actually think it looks pretty bullish, and I'm not long, yeah. But I think it is holding up well. One of the other things that I wanted to bring up is here's the dollar Mexican peso. Now, this was my chart of the day yesterday, and let me show you the chart. Now, if the dollar Mexican peso breaks this support, you can see this is divergent. This is divergent. If it breaks this support, and you can see I have an alarm set here, it's bearish. There's no coming back for the dollar Mexican peso on that move. But the flip side to that is there's no reason to be bearish down here either, unless we start breaking this low. And that's why I have that, you can see I have an alarm set, because I'm like, if this alarm goes off, I'm shorting the dollar max, and I'm just going to stay short. And that could happen. I mean, again, let's put together a China-US trade deal right now. The dollar Mexican peso will fall through that support like instantaneously, and then I'll be instantly bearish. Now, until then, the bear's got to be a little careful here. The dollar Mexican peso's got a bid. We've got a little bit of a descending wedge, and we're trying to break higher. And a break above this, 1891 or so, we might get a little squeeze back up into the, 1920s. It's entirely possible, especially if you look at the Canadian, you look at how crude's reacting. We could see a lift in these pairs. Now, it's not just the dollar Mex. I'm going to actually take you over to the Euro Mexican peso. Now, I know a lot of you guys can't trade this pair. I can, and I am. I actually just bought some this morning. Now, let me show you the reason why. All right, and I know you guys are probably like, oh wait, but it's breaking down and it's at new trend lows. Why would you be buying the US dollar or the Euro Mexican peso? We broke through all the support down here. Why would you get long? Well, the fact of the matter is, if you look longer term, let's go up to the weekly chart. From the low back in April of 2015 to the high, we're actually at the 38% retracement. So the 38% retracement, if you see here, was a brief dip below the trend lows, and we tagged it. Now, if the Euro Mexican peso gets back above here, which is 21.36, then it becomes a false breakdown. This is where I've got a little teaser position, because if it's a false breakdown, it's a false breakdown. What I'll do is if I have a little bit down here, which I do, let's just call it right here, right? Let me try to draw this correctly. So if I have a little position down here, and let's say it gets up here, and I buy more, that means my cost average will be right here. And then I can, as the momentum goes higher and I have a cost average right here, then I can move my stop to break even, and then if it if it comes down and takes my stop out, then I just I scratch it. So I'm anticipating a potential false breakdown in the US dollar or the Euro Mexican peso. Now the only way that this is going to go higher really is we're going to have to see a little bit of risk aversion, which in this market I don't know when the last time we saw any type of risk aversion was, but you never know. It could pop up again. Man, look at this dollar Canadian. That thing's just ripping. Like I said, I'm not long, and I should be long. I'm not going to chase it here because it's like, well, why wasn't I buying it yesterday at 133.15? Here we are at 133.85, so I don't want to pay up for it. But that may also be signaling that we might get some further dollar strength, maybe. Sorry, I didn't mean to yawn on you guys. This has been very tight trading ranges, obviously. This could be some further commodity currency weakness, like the Aussie, the Kiwi, that type of thing. Speaking of the Kiwi, let's take a look at the Kiwi. So the Kiwi turned away from. You see this. This is a big triangle. Broke down out of the triangle, tested the underside of the trend line, and we're coming off now. If the Kiwi breaks through this support zone here, that's going to be extremely bearish. I am not short the Kiwi US dollar, but I am long the Aussie New Zealand. So obviously, I'm long. I did a piece on Real Vision a week and a half ago. Actually, it was last Tuesday that I filmed it. It was released last Thursday, and when we were down here at 105, about how bullish I am the Aussie New Zealand because of the two central banks. It's still holding up very well. I have bids to add, down here at 105.50. Matter of fact, 105.38. I have to.
Best directional trade of the month, bro.
Well, it's hard to find them.
That's what I mean.
Yeah,
there you go.
It's tough to find them because you have to kind of look at crosses right now to get stuff like this. It's challenging, but I want to buy more because I sold a bunch of it at 105.91 yesterday. I guess it was yesterday. Yeah, yesterday morning, and so now I'm just hoping that it dips a little bit so I can buy some more. Because we are divergent. We're working off overbought signals, even though we're staying elevated. The daily chart's overbought, so I am hoping for a little bit of a dip. But that doesn't, just because I hope there's going to be a dip doesn't mean there's going to be one. The 106.20s is the longer term 38% retracement. You can see, and I think that might get hit first before we see some sort of dip. We might see this 106.22 and then dip a little bit, but I'm just hoping that we get a dip. I want to go back to the Mexican peso just because the dollar mex is showing some signs of life down here. Take a look at the rand. Okay, here's the lira. Okay, and I know you can't trade the Turkish lira. At least I can't. Maybe you guys can. It's the cost to carry is way too much, even for me right now. So, but just taking a look at these emerging market currencies are under pressure as a whole. The U.S. dollar, South African rand came out of a descending wedge, and basically we came and retested, close to retesting, however you want to draw it, something like that. We've had a nice pullback, and now we're starting to bounce. So if we see further emerging market currencies come under pressure, I think the dollar Mexican peso can continue to stay bid. This is I think going to be more of a situation of risk aversion. So you gotta see if the stock market will actually show some signs of weakness, which we're not seeing right now. We're seeing crude oil a little weaker. So perhaps stocks might pull back a little bit. But if we're close to a China-U.S. Trade deal, the markets aren't very excited. The markets are not very excited about selling equities right now. But any type of announcement from China and the U.S. Is going to obviously spark some pretty good volatility. Anyway, so with that being said, I'm going to pass it over to Steve and Stelios. Hey, Stelios. Good morning.
Good morning. How are you?
Good.
Good morning,
Good.
Blake.
Hey, good morning, guys. How are you?
Very
How
good.
have you been?
Good. Just making lemonade out of lemons.
Yeah.
Finding good trades to do when the market is very low in volatility is what we're trying to do, and seem to be
We're doing it.
We're doing it. Seem to be finding some decent
Look at the pips. So it doesn't matter, in my extremely accurate and humble opinion, with the guys that we have on the team, Blake, I've seen us do well under all market conditions.
And that's something that's really difficult to do in this environment, and we're paving the way. So, anyway, but the majors have been in fairly tight trading ranges. We're talking less than 30 pips for the euro dollar, but volatility could be very easily coming our way shortly. So, with that being said, I'm going to leave all these majors. Exotics for you, Steve, and hopefully you can find some good opportunities in some of these crosses, because that's where the action's at.
Oh, we have things to talk about. The metals are being slumped today, so we have things to talk about. We always find something to talk about. Don't worry about it.
Awesome. All right, guys. Well, hey, have a great trading session.
Good hunting, Blake.
Thanks.
Thank
Bye-bye.
Bye-bye, mate.
Okay.
Hello,
Hello.
Steves.
Yes.
Hello.
Hello.
I know.
Dale.
Brexit news.
Yes. Good news. We're gonna have this for a few more months.
Yeah. Which unfortunately was expected. Unfortunately.
Yeah. It was broadly expected. That's why the pound actually did very little. So we got this flex extension until the end of October, so a bit more than 6 more months. But in the meantime, Theresa May or whoever is leading the government, if she goes, will need to find a way to pass some kind of a withdrawal agreement, or however it is going to happen. So that's probably going to make
has a razor blade handy?
Yeah, I think it's going to make Amanda happy. When she comes back, because she's going to have many few more months to job the pound. But so that's what happened yesterday. As I said before, the reaction was quite muted, and we do have US PPI PPI, yes, coming in about a minute from now. We had some CPI readings today from China, Germany, France, all came in exactly in line. Very boring. The only one that actually beat slightly was from Sweden. It's a 1.9% year on year, so very close to the magical 2% number. And
literally magical, because for somebody to believe that inflation is close to 2%, needs to believe in magic. So yes.
Or be doing drugs. Yeah.
Or a combination of the two can work even better, I think.
Yes, and that's it. I mean, there's not much more happening since yesterday. We did have some more commentary about Italy really dropping the GDP forecast and their budget deficit forecast, which is going roughly as we expected. So GDP is going lower and the deficit is going higher. And
what's new exactly about that?
Nothing. Actually, you know what? There was another thing which really surprised me yesterday. The 5-year Greek yield is lower than the 5-year American yield. I know it has to do, it's not necessarily an indication of, credit worthiness of the country or how easy it's for the country to put on debt, because, we have, although Greek debt is not actually being bought by the ECB at the moment, as far as I remember, but, there's always a chance. Yeah.
Right.
There's always a chance, and if it does, then yields are going to go much lower. So I guess there's a reason for the market being where it is. But I actually saw those numbers, and
there is a reason for the market being where it is, and it's exactly the speculation you're talking about. But that's also at the same time a proof that price discovery has completely escaped, to today's markets. I mean, there is no price discovery.
BPI beat. Sorry to interrupt. BPI beat 0.6% versus 0.3 expected.
Yeah, so it's actually doubled that. And initial jobless claims 196 versus 210. A little bit better, but nothing to write home about having to do with that. PPA for final demand advantage 0.6. Goods increase 1%. Services rise 0.3. Okay.
Yeah, dollar's marginally stronger, but really not doing anything.
Yeah, not a really big reaction from the market. Yeah, marginally higher dollar, as you said. Other than that, it's quite a good PPI print. Good, depends on how you see it, actually. I mean, but it's much better than expected. Probably much worse than expected, because the central bank, claims that it's all about inflation, and probably they're crossing their fingers and hoping that they won't have to face that, which eventually they will have to face that. Inflation for the time being stays in asset prices, but sooner rather than later it's going to move to the rest of the economy. Okay, so no more data left for the day. I think that's worth mentioning, right, Celio?
Yes, we have nothing, at least nothing major. We have some Mexican data, but really, it's only minor.
What is worth mentioning from the things that have been happening today is the breakdown in gold. You can see it here. I was expecting a rejection from the 61.8. We actually overshot that for a couple of days, not by much, actually, by like $4. And we seem to be breaking down again. Quite a strong move today. If you see, we're even breaking below this trend line in the RSI. So I think now there is a decent chance that we're going to actually move lower from here. That's why in the question I had yesterday, I kept the rest of my position a little bit more than 1/3, for exactly that possibility. Silver also breaking down from this ascending channel. So we might see a return.
Great conviction, Steve. Because learn how to take a compliment. Great conviction, Steve.
Thank you. It's not that much.
There you go. The magic words, please and thank you.
Okay, thank you. But it's not that much about conviction. It's all about, if you get a good entry, you then have the pleasure of being able to, and you take partial profits, you then have the pleasure of being able to, without any anxiety, seeing if a move is actually going to play out. You know what I mean? So I think it was mostly better handling initially. I mean, the moves today, and also one of the things I wrote in the chat room earlier is that, as you see, we've had a very big outside black candle here on the 4-hour chart for palladium. So I think that this might also indicate that the move we were talking about yesterday, perhaps another move lower to at least retest the lows, might be on its way for palladium. So I think that after seeing this kind of a candle, if you're a short-term trader, perhaps you can even short this little rebound that we're seeing with a stop above the highs of the day, so a little bit above 1400. I'm still, keeping my 1/3 of the position and looking for lower prices. Copper still consolidating, this annoying consolidation, doing more or less nothing. It still remains elevated, but on the other hand, remains unable to break above that 297, 298 zone. So, we need to see what's going to happen from there. Silver, you talked about the possibility of a double top, and that's correct, Dale. We might be seeing a little rectangle here on the 4-hour chart with resistance being a little bit higher than 64.5, and the floor of this rectangle being more or less where we're testing now. So almost $1 lower. If we do break below this area, I think that this little rectangle would be pointing initially to another $1 of downside, which coincides more or less with this previous high here at 62.80. So not unlikely for us. I was expecting a bigger rejection, and we might get a bigger rejection, but so far, this downside momentum looks tamed. But as I said, if we do break decisively below this 63.60, 63.70 area, I think we're going to retest this previous consolidations high at 62.80. And, depends on what's happening with the price action. I mean, if we see an acceleration from here lower, fine. If not, we might be seeing another move to the upside. Anyhow, if you remember, I haven't excluded the possibility of seeing another high towards $66 before we see a deeper correction. So I think this covers more or less, the commodities that we usually have a look at, metals and crude. ForexGal says Euro being on the move. Let's have a look at Euro USD on the 4-hour chart. Yep, quite a big black candle here on the 4-hour chart. Another rejection from the 38.2. In essence, as you see, the same situation developing here with the Euro USD as we saw on a shorter time frame with crude. I mean, I see a little rectangle developing here with resistance being the 38.2% fib of this last move lower at 112.80, 112.90, and support being at 112.50. Yesterday, at some point, we penetrated through the support momentarily, but it proved to be a false break lower because, as you see, the 4-hour candle closed actually on the high. So not
yesterday's range, very key. Over yesterday's highs, we can go, but I think under yesterday's lows, Steve, I agree with you. That should seal the deal for new lows.
Well, I don't know if it's going to be new lows, but it should extend, at least 50 pips to the downside, which would mean that we also invalidate this inverted head and shoulders formation, which would mean in turn, as you said, that the chances of seeing at least a retest of this so far double bottom at 111.80 is a high probability.
There's one sell stop. I looked at the books of all the brokers. There's one sell stop right there, Steve.
Yeah, I bet there are thousands of sell stops there, as you very well know. And you know
shorted stops, man.
You know how easy the market is to test those at some point, right? I mean, we've seen that time and time again. Fast revisit of the euro pound. Euro pound still remains in what appears to be like a diamond formation. Let's see if it's a reversal formation or a continuation. We should know, sooner rather than later. But I am monitoring this pair. Euro yen, more or less same as Euro USD, trapped between this 61.8 of the last move lower at 125.60 and this low at 125. So, we have another range here, 125, 125.80, 80 pips of range. Whichever of the two, support or resistance, break first, we should see an extension. In one case, we should be targeting the 78.6. In the other case, I would be more keen of seeing actually a break to the downside because I think that the path of least resistance can easily prove to be lower. So I would be more likely to want to follow this move lower than higher. But that doesn't mean that if it breaks to the upside, we shouldn't see that kind of an extension. Now, a little comment about bonds. I have to admit here, and yields, of course, because they're both absolutely correlated, inversely correlated, of course. I do have to note here that the 10-year note rebound seems to be corrective so far. So I wouldn't be surprised to see another move to the downside, at least for the treasuries. because the situation with bonds is a little bit different, and that is another indication, perhaps, Dale, that the path of least resistance for the euro might be still remaining to the downside. The fact that the bonds look much better for a move to the upside than the treasuries. So treasuries seem to be in a corrective move to the upside. The bonds have broken above this corrective formation, and wouldn't surprise me to push higher to retest the previous high here at 166.70. So, I think that covers more or less bonds and treasuries. Keep in mind that the bond is also likely trapped in a larger consolidation. As you see, the bond has been stuck between 163.50 and 166.70 since the end of last year, actually. So this is an interesting range for the bond. In the vast majority of the cases that we had consolidations or range trading for the bond, we got the range or the consolidation getting resolved to the upside because the bond has been, non-stop going higher for years, with the exception of this multi-year corrective pattern, but it's still clearly a corrective pattern, right? You can see it here. I think that we need to respect the possibility for more upside. And as I said, this divergence in how they technically look, the bonds in comparison to the treasuries, also show that, for the time being, seeing higher prices in the bond is much more likely than seeing higher prices for treasuries. Having said that, actually crude pushing the lows from what I see, I'm now in the money actually in this trade. I have 1/3 at 63.50 and another third at 64. So I'm slightly in the money. Let's see if we can actually break down from here. Obviously, I wouldn't complain if something like that happened. My other trade here, Kiwi yen, still not doing much. I'm roughly 85 pips in the money at the moment. But I would really want to see some continuation. I would really want to see this 80 zone breaking to the downside. I started losing a little bit my patience with this. When I got involved, I was hoping for a faster resolution. So far, it isn't happening. But on the other hand, we are the rebounds are weaker and weaker. So that's the only thing that still keeps me in the trade. Probably I'm gonna actually put a stop loss somewhere here to lock in some profits, and if we don't go above 75.25 again, fine. If we do, I'll book a little bit of a profit, and I'll let it be, because I would have liked to see this move sooner. Now, having to do with indices, S&P remains extremely well bid. There's no question about it. I mean, we've been pushing the highs irrespective of what the FX market or news are coming out. So I can't help but noticing that, which tells me that we can easily push higher once again to retest the all-time high towards 29.40. I still have my short position, and I don't intend to take it off. Not at the moment. I mean, I'm not even close to taking that kind of a decision. But on the other hand, if you want to keep on hoping on the bearish side, we're still holding this ascending wedge. Although, the more we spend here not breaking down, the higher the possibility of actually, getting people more pain, people that are short more pain, and pushing to the upside. Nasdaq is actually very, very close to retesting the highs, as you can see here. I mean, even much closer. I mean, we are now, like roughly 80 handles from the all-time highs. There is clearly some loss of upside momentum. You can see it here. I was monitoring this ascending channel, but you can see this as a wedge as well. Depends on which trend line you want to trust. So you can even see it as wedge. The market very frequently likes to tease people. I wouldn't be surprised to see a reversal after breaking to new all-time highs. I bet a lot of stop losses are there. But we are also seeing some RSI divergence, so keep that in mind. So divergences all over the place. I remember the other day, Kostas mentioned the Russell breaking down. It was the day before yesterday. I said that,
Yeah.
the Russell is the index I'm less bearish at, the short term, because we had this ABC, textbook corrective formation, and that would imply another push to new highs. At least a higher high from this 160 high.
It'd be the last one to do it, Steve.
Yeah, let's see.
I'm using it as a key. I want to see the Russell take out that Feb high, and then I think then I'm buying the VIX once that happens. I'm just keying off it.
Yeah, VIX. Speaking of the VIX is also showing some signs of divergence, right? We've been pushing to new highs for the major indices. The VIX, though, has not. It has been unable to drop below 13 in essence, and that's something to take into account. Although we don't have a signal yet that the VIX is reversing. But definitely the VIX is not following suit. Now, having to do
you know
with
what, Steve, with the VIX being there, you really don't have to time it. Say, for example, you have a huge portfolio in your IRA, or some type of a long-term stock portfolio. What a great time to buy insurance. Now, when you buy insurance, you buy home insurance, you hope you don't have a fire, but if you do, you're okay.
Yeah, you're protected. Yeah.
So I think it's a great time to buy portfolio insurance for people.
Oh yeah, absolutely, absolutely. Under normal circumstances, and if we actually had real capitalistic markets, the market would have been much lower. But regardless, I think that no matter what the central banks do, there is so much they can do, but nobody is omnipotent. Nobody can really change the course of events forever, right? At some point, gravity will take hold. I don't know what the catalyst is going to be. I don't know what the signal is going to be. I don't know what the straw that's going to break the camel's back is going to be. But once the whole situation starts unraveling, I'm not sure that the central banks will be able to contain the damage. At least not until a few months have passed and a lot of wealth has been destroyed in the process. Wealth that shouldn't have been there to begin with, but that's a different kind of a conversation.
Yeah.
Having to do with
anyway, Steve, I wrote down because I have a tendency to. You ever use a CIC on a stop, cancel it close?
Yeah.
I do, but I've written down only God can change my stops.
Yeah, that's a good idea.
And I've never seen it happen. He's never changed. Only I have changed my stops.
Yeah, I pretty much doubt that he's going to ever change your stops.
Good. Well, then that'll help me not change mine. It's not worth it. What Blake said yesterday about, being wrong too long and the market's not offering, huge. I think they're setting up for huge opportunities. But if you're wrong too long, trying to recover, I think the biggest problem of that is not the loss of the trade, but the opportunity cost, because most people who are underwater on trades, and I could say this because I've lived it, you're risk averse you'll see other opportunities, but you'll go, I need this to start working for me a little bit before I pull the trigger on something else, that mind game. And you'll see trade after trade pass you by, and opportunity cost doesn't show up in your account.
Yeah, it's a vicious circle, but it can also be a virtuous circle. When things work out for you, you have more confidence in taking opportunities that look good, because you have a backstop knowing that your trades are doing good. So you know that in essence you have that feeling that you're risking profits and not your account.
Yeah.
And that is usually something that pushes you usually in the right direction of the markets.
Well,
right?
Baseball season has started here in the U.S., and if you're a baseball fan, you'll notice that the biggest home run hitters are also the biggest strikeout kings, because they're always swinging for the fences. So the difference between baseball and trading is that if you strike out here, you lose your bet. They get to come up again and try it again. If you strike out here, you're out of the game, you're on the bench.
Very true. Very true. I couldn't agree more.
Grind it out, guys. Grind it out.
Now, having to do with European indices, I have to say that they look decent. I mean, just look at this move in the DAX. I mean, it looks 100% corrective so far. So both, if you look at the RSI profile and if you look at the price action per se itself. So I have to say that you know, if I had to be long one index at the moment, that would definitely be the DAX. It looks very good to me for a break above this little bull flag and another push higher towards the 161.8% extension of the last corrective move, which would also coincide most likely when it happens, if it happens, with this ascending trend line resistance. So I think the DAX looks decent to the upside. More or less the same deal here with the FTSE. FTSE is something like a bull flag as well, although I have to admit that the DAX one is looking you know, much cleaner from a technical perspective. So DAX looks decent to me in the short term. And you know, that's something I cannot dismiss. Now, Nikkei, on the other hand, trapped here between this ascending channel support and this horizontal resistance area. Be very careful there, 22,000. We've made several attempts to break above it. We have failed so far. Obviously, there are some stop losses that are residing there. If we do make it above 22,000, I think that we should see an extension. On the other hand, the same deal with if we break below this ascending channel support. If we break below it, I do think that we should see more weakness coming through the market. So, you know, to clear levels to read, and I think seeing which of the two is going to break first is also going to give us a decent indication of what is about to happen with the USD yen. Speaking of the USD yen, let's switch to it. I'm staying, as you see, on 4-hour charts today because, you know, not much has happened or has been happening the last few days. So going on the daily charts, you know, isn't really worth it because on the daily you can't see much that have been happening. So USD yen, you know, bearish scenario means that this is, you know, this channel should break to the downside. This channel's importance for the market got confirmed once again because yesterday we found support actually here. I was looking at this. You can see that I drew that yesterday or the day before yesterday. I don't remember. You can see that I drew this as a little bear flag. So we did have a continuation lower from this bear flag, but unsurprisingly, we found support in this confluence of support, and we are rebounding from here. So what should you do with the USD yen? In my opinion, nothing. I mean, either wait for a break below this channel, in which case we should see continuation lower. So more or less the same deal with what we have in the Nikkei, or wait for a break above the recent high, in which case we should see some extension to the upside. So this is how things are with the USD yen. I wish I had more to say, but sometimes, you know, what it pays more is preserving capital by not doing much. Same situation here with the DXY. DXY can easily be interpreted here as being in some kind of a little bull flag. Of course, if that's the case, I want to see a break above it rather soon, which is a likely scenario. But even if that happens, the whole market knows that this 97.70 area, you can see it here, is all that it's important, right? All that's important to the market at the moment. So we need to see a break above 97.70, and that's going to be a very bullish development for the DXY, which undoubtedly is holding very nicely. Okay, so it's not that I'm advocating to look lower for the DXY. I think that as long as we remain well bid, there is still a very good possibility that we're going to see a retest of 97.70, and if we do retest it, the chances of it rejecting price action once again, you know, every time we do test the same area, you know, the lower the chances become, in my opinion, that it's going to hold at some point. The market is going to push through, and when that happens, the amount of stop losses found up there should do the rest of the work, pushing the market higher. We do have a a question, by the way, that I haven't covered about the USD NOK. So let's go ahead and have a look at it. So here's the USD NOK. As you see, I'm still monitoring this descending channel. We're holding support once again. Of course, we've invalidated this inverted head and shoulders formation because we never made it to its target, and we've actually broken lower. But on the other hand, I've said that multiple times, and I'm going to keep saying it as many times as it's needed. There is absolutely no reason I'm going to turn bearish this market as long as we remain above 840. And I've shown the reason. And for this, I have to go back to the daily chart, showing you that, USD NOK was consolidating in a multi-year consolidation. I mean, this is textbook corrective price action, and it actually broke above it, and it made several attempts to break back below it once again, and it has been unsuccessful every single time. So every time we tested this area, we got a very nice bid coming through. And keep in mind also that if my assumption that crude should reverse either from here or from a little bit higher comes through, that's another thing that might help USD NOK move higher from there. So USD NOK, I think between at the best, I think that you should be neutral between 840 and 880. But given, as I said, the prior trend, I think that remaining bullish as long as we remain above 840 is the way to go. I have a small position here. I'm out of the money. It's 1/3 of a position. I'm still holding to it. I might even add to it if I see some acceleration, and especially if I see a break above this descending channel. So that's what I think about USD NOK. Let's go to the USD CAD on the 4-hour chart. As you see, the USD CAD, remains in this ascending channel. Quite choppy price action. There's no question about it. So what's going to happen from here? I have absolutely no clue, because I can easily make both a bearish and a bullish case. First of all, this move higher doesn't look impulsive in any way to me. So I still maintain, the opinion that there is a decent chance that at some point we're going to see a break lower from here, one more push to the downside before seeing more strength. But that's not enough for me to turn bearish at the moment, because on the other hand, USD CAD remains quite well bid. There's no question about it. So if you want to focus on the shorter term, you can even focus on this recent range. So we have a range that extends roughly from 134.50 down to 132.80. So you can focus on the short term in this range and see which side is going to break first. Probably when that happens, it should extend. Just look at the 4-hour RSI as well. Although 4-hour RSI, since on the 4-hour chart, the RSI is much sensitive to moves. Because it can move quite a lot because it's a short term time frame. It still has failed to push to overbought or oversold territory. That's another indication that the market is range bound. So I would want to see something happening here before anything else. Now, assuming that we see some crude weakness, that obviously should help USD CAD overperform. But as I said, on the other hand, I don't like this move to the upside. It doesn't inspire me for more upside for the time being. So I wouldn't be committing to any positions for the USD CAD. I'm just giving you, both sides of the market, and you can decide for yourself what you like more and for what reason. Now, on the other hand, I have a more clear view for the CAD yen, right? So CAD yen, I think this recent consolidation has a decent chance of continuing higher. So, CAD yen, if I had to choose a side, it would be the long one. Okay. Of course, not a clean formation in any way, but I do think that the path of least resistance, at least in the short term, remains higher. Coach, we do have an interview today. Am I right?
Yes, yeah, one of my favorite guests, Peter Goodburn, is with us.
Ah, perfect.
And
If
he's
he's
in the
here,
house.
okay. If he's here, you can go ahead and start. Anyhow, I think we've covered everything that has really moved since yesterday, which aren't a lot of things, but you know, sooner or later we're going to get more volatility, and you know, it's all about being prepared when that happens to take advantage of it. So, you know, don't just, you know, give up. Keep making plans about what you would do in case A, case B, case C, or whatever. And when we start getting movements, I think we're going to get a lot of trading opportunities coming on us at the same time. And you know, that's always a nice period to be a trader, right?
Let me
But you have
test
to
you.
be there. Yeah, you have to be there for the bad times in order for you to be there for the good times as well, as you say, right?
I like this. To be there for the good times, you have to be there all the time.
Yeah,
And,
exactly.
Yeah, and I'm going to test you, Steve. Great gold trade.
Thank you.
There you go. All right. Peter's here. Peter, thank you, bro. I'm really looking forward to talking to you. Welcome back to Face, my trading warrior brother, Peter Goodburn.
Can you hear me?
I can hear you, Peter. How are you today?
Hey, good, great. Hey, this is great.
Welcome back.
Thanks a lot. Yeah, thanks.
And look, and no blinking screen.
Oh, that's good. Yeah, I think one of your listeners piped in and said, "Hey, I think we had a Mercury retrograde." And of course, for those that are astrological minded, Mercury retrograde always causes a bit of fuzziness around technology. So maybe that was it.
I thought it was like the movie The Core, which I just watched a few days ago, which is about, you know, losing the magnetic properties of the core, and which cause EMP and, you know, all kinds of apocalyptic stuff. So anyway, speaking about at least interruptions. So is this where you want to start, Peter?
Can you see the S&P?
Have the S&P here with the potential for 29.28 for a 5 and then a correction.
Yeah, I have to say that when we spoke last, I was already expecting a top out, and it's funny how you know the time goes so quickly, because that was almost a month ago, and we were at this point here.
Yeah.
And I thought that we'd actually topped out. There seemed to be this to me seemed like a bit of an unnecessary sequence, because ordinarily when we start looking at the way that all the US stock markets moved higher from December's lows. Now, don't forget that back in December, they all bottomed at exactly the same time within a few days. So,
and topping at different times. Russell still hasn't taken out its Feb high. Is that the unfinished business before the correction begins, Peter? That's what I'm thinking.
Yes, I mean, there seems to be that we've got underperformance in things like the Russell, which topped out earlier. And don't forget that the banking index, I was taking a look at that a short while ago.
Hasn't done anything. I mean, it's 61.8 back of the whole decline. It hasn't been able to close above it that I've seen.
Yeah,
XLF, right? XLF, right?
XLF. Well, I've got the KBW banking index itself.
Okay.
And there's an ETF which is something similar called KBE, but I'm not sure. Let me switch over. I'll show you what I mean. Because that one finished early as well. Look at this. This is again at the beginning of March.
Right.
And we've had this big sweep down.
Was that a reversal signature, that sweep down? I know you have something called a reversal signature, where you need a certain percentage move off a swing high or low to tell you we have a reversal.
That's right. Well, we got the reversal signature here, and we got stopped out here because it went to a higher high. I didn't expect that higher high at the time.
Okay.
And we actually triggered some stops. We got back in, fortunately, when it started this day here to drop down. on the close. So we caught some of the move, but not as much as I would have expected normally. But if you consider that we went from 102 to that move down to 90.75,
that's a big 10%.
Yeah, and that's the sort of swing that you would have expected to happen, you know, universally across all the major indices as well, including the S&P, but we haven't. And I think there might be some clues from the Russell, because I was taking a look at that actually just before we logged in just now, and I think it's a clue, because can you see how we've dropped down in 3 waves again from February? So you got a fairly concise three wave pattern there. We put the brakes on and we started to pull up. And I was looking at this last night and this morning again, but I think this is going to stretch up a little bit here today. And then I think probably I'll update this chart to show something like this. It's called an expanding flat pattern, and it's a 535 zigzag from the 1497 high. So it'll probably come up like this. We'll drop back a bit, and then we'll probably go up to this number up here, this 1629 area. That's derived from extending. If we put in the 14, 23, 38 levels, and we extend like this, you're going to get to 3 important fib price ratio levels where we can see a B wave of an expanding flat develop. I've chosen 1629, which is the middle one, the 23.6% area, but I might raise it up to the 1646 level. And then we'll get after that, we'll get a 5-wave drop down to this number here, this 1435 area.
Okay.
So it might be that we're going to have to stall for the S&P or wait a bit. It might end up pulling down in 5 waves, and when this trends up, rather than underperforming, which it's done recently, it might swing around in a slight period of outperformance for a while. I'm not certain about that, because it's very difficult to prolong the S&P's advance at the moment.
You know what catalyst? Now that you're bringing this up, the underperformance. What a catalyst may be is, right or wrong, a lot of people gravitated towards Russell last year because they felt it was insulated from a trade war. Mm-hmm. And also, it likes a strong dollar because they're domestic companies. So it's possible maybe it's because once its dollar correction is over, and I want to talk to you about that, mm-hmm. and perhaps some type of friction with Europe that's already beginning with small things. Mm-hmm. Everything's a war, either a trade war or threat of military intervention. So maybe that's going to be behind Russell outperformance, making quite a nice new high, and the percentages in the other indices, like you said, will not be as great. Could that be a fundamental catalyst, bro?
Absolutely right. Yeah, I mean, it does look as if now that the US-China negotiations are closing in on probably a preliminary agreement, at least, if anything else, then Donald Trump's eyes are going to start looking at Europe, aren't they? Because he's threatening about sort of putting punitive tariffs on car parts and imports and stuff like that, and wine and cheese and other few items like that.
Oh, so, gosh, all the winos in the U.S. are not going to be happy about that.
You have to stick to your Californian wine, won't you?
Well, yeah, that's true. Domestic wine, so buy domestic.
That's what he's trying to do. He's trying to stimulate the domestic economy, Okay. I mean, if you can do that rather than drinking foreign products, you start cutting the trade balance and stuff. But
I like beer better anyway. As long as he doesn't put a tariff on Guinness. Anyway, Peter. So
the Irish would never let that happen. Never.
Good, Pete. All the people who love a chocolate milkshake beer, which is what it tastes like to me, they'll be happy about that. So, okay. We've covered stock indexes, and I know that longer term, you're looking for much higher levels in the dollar. And the question is, everyone was saying the breakout over 97.80 was a layup, which made me think that we could have one more jiggle to the downside. I'm now asking myself, was this enough in the last week and a half, or is a full-blown retest of 96 in the cards, which could keep risk on? What do you think?
I think that, well, for sure, we're going to get up to 102.79. This is this number up here.
Yeah.
There's no doubt in my mind we're going to do that. The exact timing of this next acceleration, I've been looking at some of the commodities to try and pitch when that timing might occur, in particular oil and not so much, well, gold is a good indicator too, but also I'm looking at things like copper. I published this chart, this one, last weekend as our weekly prenup for our institutional clients, and what I mentioned there was that here's the August lows that we saw last year, and this was the beginning of copper, which is the middle chart. This is the beginning of the correction down from this high here, and it's taken the form of what we describe as an expanding flat pattern, 335. We've come up here. We've pretty much done the targets. It could squeeze up a tiny bit more, not much. When you look at sterling dollar, that's a very good proxy because, again, last year when the dollar index started to push up from February and the euro started to decline from February's highs, the sterling dollar was a little bit late. It was about April time. You can see copper was even later before it started to kick in this correction. So there was a little bit of a mismatch at the tops, but they all bottomed exactly the same time in August, as you can see here. And then again, sterling dollar's done another expanding flat pattern, and that's getting ready to
bottomed
head
in
down.
January too.
Yeah,
Just
exactly.
January. Yeah,
absolutely. They were just they were days apart, and so this is really burning the candle to its end now, and I think that we're looking at an imminent drop. All you need is one daily bar, which shows a bit of volume going through to the downside, and I think you get your trigger point. If you want to preempt a reversal signature, you can go in. I think the chances of moving down quite substantially is I consider to be very high. And crude oil is another interesting aspect, whereas the US indices have all pushed up from December's lows into 5 price swings so far. So we've got the S&P we looked at just now and the Russell, and that's going through a bit of a correction. But actually oil, where we had originally back in December when we hit lows, we knew that this upswing should be a correction to oil's decline in October. But I thought that it was going to match up with a 5-wave pattern, pull back, and then get up to the zigzag. But I've noticed in the last days that actually, let's look at oil now, that we can come back to currencies, don't worry. But
it's a great presentation.
But if you look at oil, here's the zigzag, and it's in a much advanced state, and I thought it could have been. Now this is, I'm short of oil, like I'm maxed out my position. I can't really add to anything now unless it goes up another $5-6, but I doubt it very much. But look here, if we start to extend wave A, oh, I've got the wrong ratios in from before, so let's change that back to 61.8. But if we extend this by 61.8%, we're getting into these price areas here, into this band, right where we are.
Yeah.
And this defines the zigzag, which is a correction to last year's drop here from 76.90. So this is very, very late in that scenario. All you need is one big bar to the downside. I noticed that the oil stocks were released earlier today, and they were quite high. So now the US is a bigger producer of crude oil than Saudi Arabia. Can you imagine that?
Yeah.
It's not enough, obviously, to tip the market into a big volume day to the downside. But I'm pretty convinced that this is going to happen within the next week, and it might happen tonight. So you're in a time frame where you've got to be watching this. You've got to be very alert. You've got to plan your strategy trades already. You've got to have them all lined up ready so that when you see the sign, you can step in straight away. Now, it's important to catch the first.
I have 62 ceiling at top because I was trying it at 60-80-ish, and I had a wedge line there, Peter, and it turned into a throwover. So the way I would trade a throwover, even though I like to hear the ice crack, I was saying earlier in the day, give me one more high, I'm all over crude shorts, right? But if Yeah, so we had that throwover, right? So back inside that line seals it. That's how I teach people to trade throwovers. Let it do whatever it wants. Then once it's back inside the wedge line or return line, that seals the deal.
Good, good. Yeah, absolutely. It would take care of it for sure. I mean, the delay here, I mean, we might trade up to 66, another couple of bucks before we start to turn around.
Yeah.
One of the other things I'm pretty fascinated in at the moment is, let's go to 1393, is the banking index, because, I mean, this to me is a really fascinating situation, because actually in Europe here, we're hearing a lot about Deutsche Bank maybe merging with Commerzbank.
Yeah.
And creating a bank that's too big to fail. Well, I mean, that might be the case, but I think that the banking index is a very interesting play. I mean, look at this, has been decimated since last year. When we started to correct down last year in 2018's correction,
right.
You know, this has gone past the October low where we initially saw the sell-off in the US markets, and then here it bottomed in December again. Hey presto.
Yeah.
But this is a very deep correction. I mean, it's an 85% retracement from back here. I mean, that's really decimating the banks in Europe. But the interesting thing is that we've started to push up in 5 ways, and this is a leading expanding diagonal. And it's composed of 5 price swings, but we've got a sort of an open wedge shaped. You can see the boundary lines are opening out. So actually, the beginning of that pattern is an inversion to a contracting diagonal. This one is narrowest at the beginning point, and then it sort of widens out towards the end. But the interesting thing is that the subdivisions, unlike an ending diagonal in Elliott terms, they're usually subdividing into 3-wave patterns: zigzags, doubles, triple zigzags. This one is subdividing into 5 price swings. So you have 5 price swings in here, and you have 5 springs in here, and you have 5 price swings coming up here. And you can see we're not finished yet. We've got to have another little shunt to the upside. I mean, it's not too much, but
maybe that happens with your 29, 25 or 28 target in S&Ps.
Yeah, I think it probably shall. It looks as if we're getting ready to push up a little bit more. But after that, I think we're getting then ready for this, you know, deep retracement. It won't break the lows. But this is a fascinating insight to what's coming later after the retracement.
Yeah, so if it's a 2 down there, Peter, that I think if we down there by that time frame, the bond rally should be over and yields might start be heading up again. Is that what you're saying?
Absolutely right, Dale. Yeah, I mean, I think the bond yields are a very important situation. Let's have a look at those, because we've got a major low back in July 16. There's no doubt that, you know, we've hit a major low. This was the end of the entire decline from January 1981. Here we've got a 5 pricing event, and we're coming down in a correction. This is fascinating because, as you say, by the time we get down in the correction stock markets, this will also finish. I've got a target down to the 50% retracement level of about 207.50.
Okay.
And from an Elliott perspective, that looks about right, because it's about a 50% retracement from this swing from 131.60, and also if we extend this by 61.8, well, we should at least get down to 218. I think we might stretch a little bit lower and get to 207. But this pattern down is a diagonal, and that's quite fascinating.
Ending diagonal. Yeah.
Yes, ending type. Yeah, exactly.
I love those.
Well, the good thing about diagonals, and I always, when I teach Elliott Wave, I always try and make sure students are learning about the diagonal patterns. Why? Because it's great when they turn up, because you've got a finite price level of completion. So you see, as course, you know, a lot of people can't get on with Elliott Wave because they say, well, look, you can go through various different extensions, you know, in an expanding impulse pattern, and you know, the 5th wave, oh, you think it's finished here, and then it extends, and you go 3, 4, 5. You don't often get a 5th wave extension. So for anybody listening in right now, don't worry about that happening too often. It's probably a 1 or 2 in 100 times it would ever happen.
Peter, what do you think about that? If and you know, the complexity of Elliott, if people just concentrated and had the patience, because you know it's hard to sit and watch the markets and not do anything, but if you had the patience just to wait for, say you were a reversal trader, that's your like I am. Okay, so and that's your forte, and there aren't always, significant reversals, so there's going to be a lot of time between it depending upon what you're screening. How about if someone wanted to learn Elliott and just really learned well diagonals and ending diagonals and had the patience to wait just for those?
Well, I tell you what, if they could have the patience to do it, I know everybody's patience levels have decreased substantially since the last 10 or 15 years because we're inundated with information, through networks and stuff. But if you could do that and somehow control your life where these things get turned off for a while and you just stare at charts and look at the nuances, I have to admit, you pick up a fifth sense. You begin to trust your intuition more. And when you put your intuition along a pragmatic level and learn Elliott wave with all these nuances which encompass the process, you do begin to create a fifth sense, or a sixth sense, I should say. You begin to, it's like they always say if you're blind or a blind person, you somehow create a sixth sense and you can find your way around. You can sometimes see better than someone with eyes. Beautiful. With full proper sight. And I think that's the case with Elliott. If you have that patience, I think it's achievable. I think the real addiction can come, and you don't have to work too hard at it, if you maybe spend a bit of time and if you manage to forecast something that works out. Now, I'm not talking about maybe a short-term phenomena. I'm talking about something of duration, maybe a couple of months. And it pretty much follows the pattern that you've drawn up, and it comes to fruition. Now, that's a very powerful thing that you've discovered in yourself. And once you've developed that, I think it encourages you to try more. So it's cumulative. It's a cumulative situation, and it's one of the best cumulative drugs that I know to mankind, because everything else seems to be detrimental when we talk about addictions. But this is a very cumulative process, which is somewhat addictive if you can experiment a bit and trust yourself. And I always think that this is also a meditative process as well, because you have to let go of certain things, inhibitions that you have. And it's almost as if you're looking at them in a mirror half the time, and you're looking at yourself and wondering, discovering, and it is a discovery process. And I think that you have to let go, particularly when you get noise and background of news flows and things. And in the old days, when I was working my trading company and teaching my traders, their performance in forecasting with Elliott wave was actually not so good. And I took me ages to figure out why. And then actually, I didn't realize that I set up a complete rat program of studying them over a week. I purposely sort of fiddled around with a coffee machine behind their desk, looked to see what they were reading, stuff like that. And eventually I found that they were just reading a lot of trash, a lot of news flow related to the market. And eventually I told them that we'd have to remove all of that process and remove news feeds on their systems and everything. And eventually, they just concentrated on the patterns. And I'm telling you, within a month, and it didn't take longer, their performance was way up, and they really started to get into the groove, into the rhythm of it. And it's a very valuable experience. I have to say, I'm obviously going on about it quite a bit now to you, because anybody listening, I'd really like to encourage them to try it.
Wow, great story, Peter. And speaking from training and mentoring, you're a natural teacher. You just mentored us, and I learned from you. Can we wrap it up with gold and silver, and
Sure.
What the expectations are going forward here?
Well, of course, again, we're sort of dollar biased on this, and I don't think that gold is going to. Why don't we start with something a little bit bigger, longer term on gold for a moment? Okay. Because I don't think we're going to move up a lot on gold until we get the dollar index topping out of that 102 number.
Okay.
So we're going to have to wait a bit. We're going to have to wait. My really bullish count for gold is something like this, but I have to say it's a 50-50 probability. I drew this chart and I've kept it going quite a few years ago when we first saw the low back here in December 15. And I always thought that it might be possible to see a new high on gold But I have to say that it's diminished that expectation to some extent. I'll show you what the alternative looks like in just a moment. But this upswing, when we moved up in 2016, some of the mining stocks I'd been tracking at the time, and I loved Newmont Mining because there was this huge decennial expanding flat. It took 10 years for it to unfold.
I remember we did an interview. You covered it before the explosion in 2015.
Right, I think we did. Well, you got a better memory than I have, and that was a 300% gain, pretty much.
Yeah.
2016 up here, and this was only 30%. So it was a tenth of the move, and I was thinking, you know, I've got a target of 166 on Newmont Mining. I'll toggle between the two here, and you'll see what I mean. This is Newmont Mining's forecast up to 166, and the expanding flat pattern, 1432, is this one. And you can see the expanding flat. For those of you familiar with Elliott wave, you can see a 3 price swing down swing for wave A. We got a 3 price swing event up in wave B, breaks new highs. You can extend wave A by 61.8, pinpoint that top. It's picture perfect, really. And then we get this beautiful 5 price swing decline. But look at that. I mean, we've gone from 1539 up to 46. And here's the correction down since. So actually, I think we've probably bottomed. So any pullback in gold, mining stocks or whatever, I don't think it should break that low anymore. But the main point to this is that you've got this huge upside potential here. And I thought, going back to bullion on gold now, let's go back to that, back in 2016, that such a move up to 166 would almost certainly mean that bullion would break new highs. But I've since seen that underperformance and this sort of sideways patterning has been detrimental to that process. We are going to go to at least 1530 at some stage in the next 18 months, 24 month period. And it would look something like this under an alternate count. Let's have a look. Here we go. So here's the alternate count. This would be the all-time high then, and this would be a new downswing. And this is just simply a correction, which is going wave A into a zigzag, B down, and we're gonna sort of make hard weather of it, getting up to 1527, and that's sort of the bearish count. So in the short term, where are we within this? Now this pattern up from August's low is an incomplete 5. And it's quite a fascinating sort of journey on this one, because when we take a look at that, let's look at the inset chart on the left here. It's just loading up. Here's the August low at 1160. Now, we did a little step-like movement here. And originally, when I saw that, I thought, oh, that looks, that measures like a zigzag. That could mean that we break into lower lows. But then we started to see a 3 price swing event down here. And we actually turned our position around when we broke this level. It wasn't what I expected prior to that, but we were actioned enough to get into, cover our shorts and get into longs.
If you don't learn how to change your mind, you won't have any change left. WD Gann.
I do love that one, actually, and so good in its essence. But one thing that really struck me was that the way that we went from this 1196 level up into the February high here, 1347. For an Elliott, for anybody interested in Elliott, this is a typical 5-wave pattern, but you've got a 1-degree subdivision in the 3rd wave, which is quite visible. So you've got basically a 9-wave sequence. So you go 5 to 9 because you've got 5-wave subdivision in wave 3. But the nice thing about this, and you know that my work specializes in fib price ratios, and we've developed various fib price ratios to fit different patterns in different circumstances. And the one that really worked out here is to extend the first 121 sequence here by 1618. And if I double click, that's where the projection came.
Okay.
So you can see that that was a perfect timing for the structure of the pattern and the measurement, the amplitude, to finish a 3rd wave from there. But you see, we've got a 4-5-4-5 sequence to develop a 1-2-1-2. It's got to drop down here, and then we've got to see 2 successive higher highs. So we've got to, after getting down here, we've got to go 5, 4, 5, like this.
Okay.
And yeah, that's the only way I could see gold progressing from this pattern since. So
Okay.
shorter term, yeah, we could drop down here. But then we're going to have to get something like that going. I don't think that we've got any inflation to worry about at this juncture. And if
Maybe
we are
it's
going to
just
go up,
central bank buying. Maybe it's a currency thing. You know, after the dollar blow off. I do have a question, and I've heard it a lot. If someone wants to learn Elliott Wave, what is the best way to start? From Umar. How would you start? How did you start your trade? Your people on your desk to learn Elliott?
Right. Well, I'm actually working at the moment to get a more detailed, concise program, tutorial program together. I guess I'm some months away, but we want to get that ready for a new website that we're developing. We're going to put a lot of information on there. I've got quite a bit already that you can see on wavetrack.com. So, Umar, if you're listening, if you're listening, go to wavetrack.com, and you can go in here and you can see under Elliott Wave Resources, you can go tutorials. We can click on that now, and there's some quite good articles in here, and this will get you going. And we can also, I mean, if you click on the wave principle itself, there's a huge amount of tutorial in here. Start this way, and you can see there's a lot of pictograms here, and you can test your way along the way to match up some of these chart patterns to what you're seeing real time. So there's definitely a lot of material in wavetrack.com there under testimonials, and piece your way through it. One of the other things is that our bi-weekly report, the Elliott Wave Compass, which is $39 a month, so we've priced it very keenly to attract everybody, is very tutorial minded. You know, we're always commenting on why this pattern, why are we changing things, or why is this still working, and what are the price ratios, and how do we derive them? And it's absolutely packed full of information. Every week, twice a week, we're packing each of these currencies, commodities, and stock indices with all of that information. We're not leading you down a blind alley. We're actually describing in a lot of detail exactly what is developing and why it is, and what the logic behind it is. And actually, a lot of our subscribers often come through to thank us for leading them in that way, because it is not just helping them trade better, but you know, there's a lot of tutorial information in there.
Yeah, like I always say, and I mentor people too, Peter, and it's really not the trade that matters, it's the whys. It's knowing the whys, because you know what? None of us live forever. And I want people to have tools to use for the rest of their life when I'm retired on Grand Cayman Island, just hanging out, man. And so they have to learn the whys behind the trade so that they could become self-directed and not just dependent upon any analyst.
No, I think that's a great virtue that you have, and if anybody's listening to Dale speak to that, well, you know, I bow in awe, because you know that has got to be a way that, you know, people like yourself and can actually give something back. You know, we've taken a lot from people that we've been learning from in the past years, and we can give something back, and we like to do that. So I think that's a great virtue. And no, I think that ultimately when we start looking at helping others, you always find that, and I've always found that if the more you give, the more you receive. So there's a good rule to that.
Yeah, you reap what you sow, and what an interview. So, you know, definitely, I would say it's a bumper crop of compelling ideas from you today, Peter, to carry the farmer metaphor a little further. So the best way for people to follow you is go to your website. You want to give that address again, or let people take a screenshot of it?
Great. Yeah, let's go to wavetrack.com. So www.wavetrack.com, and just go there. And if you feel inclined to delve into Elliott Wave. If you haven't done so already, or if you're already a beginner or an intermediate trader and you want to learn more about fib price ratios, because within the Elliott fraternity, we are specialists in fib price ratios. We put a lot of emphasis there to give targets. Then just go to our registration area, subscriptions, and you can subscribe to Elliott Wave Compass, and we've got generous discounts for longer term maturity subscriptions as well. So this is where you can find it. So thanks for allowing me to plug it.
Okay, buddy, my trading warrior brother, thank you for edifying faith once again today, Peter.
Thanks so much, Dale. I appreciate it. Good luck to you.
All right, good hunting, Peter. That's Peter Goodburn, my trading warrior brother. And that's a wrap for today. We'll see everyone tomorrow. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios. Manny says, thank you, Peter. Omar says, best interview in a month. So we'll wrap it up on that positive note. Thank you, Peter, once again.